Hey, good afternoon, guys. Welcome to my channel. If you're here for the first time, please like, subscribe, click the notification button so that if I ever do share anything new on my channel, you always get a notification immediately and you never get to miss anything that I do post. So today I want to do a very quick video on how to use the fib or the Fibonacci to place your stop loss. Somebody asked me this in one of my classes, and I was like, I'll just do a quick video so that everyone can just have an idea of how I use my fibs, right? So I'll give you a typical example. This is Euro USD, okay? And we can say technically, this is okay. Let's assume you've already analyzed your trade and you just want to figure out, okay, fine, how do I get into this trade? So for me, just looking at this very quickly, I'll be like, okay, this is a good level based off, let's say, this level here. So let me assume, let's assume that we cannot see this level. So let's just so for me, this rejection here, that's why I had plotted this line here. So I just placed a key level here for me. Like this looks like an engulfing candle formation happening. This looks like a liquidity block going on there. So this is a key level for me. So my take would be if price comes back to this level, I probably want to jump in for a buy. I keep it very simple, very simple. So I'll just let me look at it and see what happens. Okay, so it's scaled a bit lower. Okay, now we've retested. So we've rallied, retested. We've tried to retest this high, but it's not yet gotten there. So technically for me, now that we've retested another level here, okay, we are seeing another key level here. I'll be like, I want to get in maybe somewhere here, okay, based off this initial point where I saw it. So I likely put, so there we go, we've retested. And what has happened, if you've seen, we've bounced off this level again, and then we kind of pulled back a bit, like we wanted to come back to this level and then continue pushing on the up. So what's been happening is we've been scaling higher highs and higher highs and lower highs and lower highs and lower highs. So I'm bullish on this pair right now as we speak. Traditionally, what I would have done is just put my position size calculator there, place my stop below the previous low, and then do a 2-to-1, keep it simple, and that would be my take profit. That's one way. Another way is the fib. So I take my fib tool and I look at the swing high, swing low, right? So my swing low is here, and then I take it to the next, let's say, swing high. Where's the next? Here, which is here, right? So my stop loss would be at the 1.2. If you look at it, if I maximize this, would be at the 1.272 level, which is not far from my position size calculator. So let's say I was interested in the position size calculator. My position size calculator, my pips are 19 pips stop loss. If I use the 1.272, in this case, it would be slightly more in terms of my stop loss, about 23 pips, which is not bad. That's okay, right? So that's if I'm buying right there. So that's how I would use my tool. So if I was selling, let's say we are looking back, looking left to see past, I would take, let's say I wanted to sell from this position here. Okay, first of all, let's see if this trade pans out. My stop loss is hit. Remember, I use the fib to kind of, I use the fib here to plot it from the swing low to the swing high there. Yeah, so we are good. No drawdown here. That's fine. So let's say, for example, I want to do the opposite. I'm selling this pair. So let me look at, let's say, sorry, my, so we are in this trade now. We want to kind of, okay, how do we sell this pair now? I'd probably wait for, so I have to analyze it first, right? This is where we're at. I'm trying to look for key levels. Why do I want to sell? Because, well, price has been retesting a certain key level there, as you can see. There's a lot of liquidity up here. Okay, price is pushing lower and lower and lower. It may fake out to the top and then before it goes down to the downside. But if I look left, I'm like, okay. This is possibly a key level. So if I was selling, I would put my fib here. I would look for the swing high. So there's no swing high yet, but I can see. Okay, so the swing high is actually here. And I would put it on the previous swing low. Okay, so my stop loss would be at the 1.272 level. So I don't know if you guys have seen what I've done. This is the previous swing low. This is a swing high. So if I'm selling, I take the fib from the swing high to the swing low. If I'm buying, I take the fib from the swing low to the swing high. Okay, so this is where I would put my stop loss at the 1.272, which is about, let's say, about 12 pips, yeah, from my entry there. If I was not using the fib, I would maybe now tell myself, okay, this is an engulfing candle, so I will take my short position around here. And if you look at it based off, and then I'll do a 2 to 1 right about there, which is almost at my level here. Okay, and that's about 17 pips. If I was to do the fib again, just so that you guys can see, this is swing low. So I'm going from the swing high on the body of the candle, the body. This is the body, this, is the body. So from the body, from the body of the candle up here to the low, swing low body of the candle. And we can see we're almost smack at the same level, slightly lower below the 1272, but smack there. So that's a different way using the position size calculator. But if you're just strictly using the fib, this would be your stop loss, and then you would take your profit at this other key level. Now, let me just reiterate for those who don't know what a swing high and a swing low is. Here is a swing high. So this is a swing high. Okay, swing high at the top of a structure, and then swing low at the bottom of a structure. So in this case, swing low. So two candles on the side that are lower than, sorry, I'm doing the same thing. This should be, so this should be like that. And then another candle here. Don't worry about the size and shapes of my candles. These are just to give you an idea. So this is a swing low. This is a swing high. So if you look closely at where I was plotting my swing low, this is where I was plotting my swing low. This is the candle below, and then there are two candles above it. And then if I was doing the swing high, if I was plotting the swing high, sorry guys, I would be like, this is the swing high. This is the swing high candle. Okay, this is, sometimes people ask, which exactly is the candle you look at? This would be the exact candle I'd be looking at. Okay, swing high, two candles, two bearish candles on the side, and then swing low, two higher candles here. So people plot this differently. This is how I do. So again, if I'm using the Fibonacci tool, I take, if I'm on a sell, I go from the swing high to the swing low. If I am on a buy, I go from the swing low, body of the candle, to the swing high, whatever that is. And then for both cases, I look for the 1.272 below the candles in a buy, or vice versa, the same 1.272 above the bodies of the previous high, or previous high, yeah, for the sell. So I hope that is clear, guys. Swing high, swing low. Take your fib if you're selling from the top of the swing high to the bottom. Take your fib if you're buying from the bottom of the candles to the top of the swing high, and then you choose the 1.272 level on the Fibonacci tool. I hope this video has been valuable. If it has, please share, like, comment. And guys, you know that if you like my videos, YouTube is happy and more people are able to see or access my YouTube videos. So I really appreciate the support. Thank you very much and see you soon. Thank you. Bye.